Welcome back to the session on Accounting for Partnership Basic Concepts, Part 5. Dear students, in this session we will be focusing on problems related to fixed capital method and fluctuating capital method. In our previous sessions, we have learned that partners of a partnership firm will have to maintain a partner's capital account to record the business transactions. Business transactions can be like capital, withdrawal of capital, share of profit, interest on capital, interest on drawing, partner's salary, commission to partners, and so on. So, there are two important methods for maintaining the partner's account. One, fixed capital method. Two, fluctuating capital method. Now, under fixed capital method, we maintain two types of accounts. Again, this we have discussed in our previous session. So, if you look at the pro forma, here we have partners capital account and partners current account. So, in partners capital account, we record only those items which are related to capital, like the opening balance of capital, any amount of capital that has been introduced during the year, or withdrawal of capital. Anything that is related to capital is only recorded in partner's capital account. Likewise, in partner's current account, all other transactions other than capital will be recorded. If you look at salary, commission, interest on capital, profit and loss appropriation profit, profit and loss appropriation loss, drawings, interest on drawings, such items will be recorded in partner's current account. Fluctuating capital method. Here we have only one capital account, that is partner's capital account. Now, since capital is not fixed, it keeps on fluctuating. So, therefore, we maintain only one account. So, amount of fresh capital introduced during the year or any opening balances during the year, salary, interest on capital, profit and loss profit, profit and loss appropriation losses, interest on drawings, such items all put together is recorded in only in one account, that is partner's capital account. So let's start with the very first problem. Arun and Varun are partners with capital of rupees 15 lakh and 10 lakh respectively. They agreed to share profits in the ratio of 3:2. Show how the following transactions will be recorded in the capital accounts of the partners in case. So there are two cases. The first one, the capitals are fixed, the capitals are fluctuating. So we have just discussed that partners accounts can be maintained under two methods. One is under fixed method, another one is under the fluctuating method. Further, the books are closed on 31st March every year. Let's look into some additional information. Additional capital contributed on July 1, 2019, 3 lakh and 2 lakh. Interest on capital being 5% each. Drawings 30,000, 20,000. Interest on drawings 1,800, 1,200. Salary only for Arun 20,000. Commission 10,000, 7,000. Share and loss for the year 2019-20, 60,000 and 40,000. So this is our problem. Partners are Arun and Varun. For Arun, capital is 15 lakh. For Varun, it is 10 lakh. We will remember that the profit sharing ratio is 3:2. Now the question says that first we will work out the problem when the capital of the partners are fixed. Then we will work out the problem, that is when the capitals are fluctuating. Now keeping in mind the capitals are fixed. Now we need to prepare two types of accounts. One being partners capital account, and the second one is partners current account. So here Arun and Varun being the partners, capital 15 lakh and 10 lakh will go to partners capital account. Additional capital that is introduced, so additional capital 3 lakh and 2 lakh will go to partners capital account. All other information, that is right from interest on capital till the share in loss, will directly go to your partner's current account. Okay. If capitals are fixed, first partners capital account. So when we prepare partners capital account, we will have debit side and credit side. So what I would like to say is, first write the question in your notebook, understand the explanation, then work out the problem in your notes. Now, the question says the balances of the partners, the capital of the partners being 15 lakh and 10 lakh. Okay. Now, how the posting is being done? On the debit side, you will record the amount that decreases the partner's fund. On the credit side, you will record the amount that increases the partner's fund. The rule that you have to remember here is partner's capital account is classified under personal account. So, debit the receiver, credit the giver. Let's begin with the solution. Balances of the partners is the capital of the partners 15 lakh and 10 lakh. In the extra information provided, we can see there is additional capital contributed, that is 3 lakh and 2 lakh. Okay. So let's do the balancing of amounts. Okay. If you look at Arun, we have 15 lakh plus 3 lakh is 18 lakh. So we have done the balancing of 18 lakh on both the sides. There is no amount on debit side for us. So directly we will do the balances being carried down and brought down. Varun, on the credit side, we have 10 lakh and 2 lakh. If you take the total, the balances being 12 lakh written on both the sides. We do not have any debit transactions. So the balances is being carried down and brought down. So this is the first account, partners capital account. Now all other transactions will go to partners current account. So let's take the information. Interest on capital being 5% for both the partners. So interest on capital. So let's look at for Arun. Arun is bringing in rupees 15 lakh. Okay. On this 15 lakh, we are going to calculate 5% interest. He is also bringing in additional capital, that is rupees 3 lakh. Again, we need to charge 5% interest. But the question says additional capital contributed on July 1st, 2019. That means from July to the year ending on 31st of March, we will get 9 months. So 9 divided by 12. Let me take back to you to the question. Okay. Additional capital being introduced on July 1, 2019, and for us the year is ending on March 31st. So that's going to be 31st March 2020. So from July to March, we are going to get 9 months. The calculation goes like this: July, August, September, October, November, December, January, February, March. We are going to get 9 months. Okay. Let's get back to the solution. That is interest on capital for Arun on 3 lakh, 5%, for 9 months. 9 by 12. Likewise for Varun. So how does the Varun calculation go? His capital is 10 lakh, 5% interest on capital. Additional capital introduced is 2 lakh. Again 5% interest calculated for 9 months. That is for both the partners. Date of introduction is July 1st and interest on capital being 5% for both the partners. So that's how we will get 86,250 for Arun and 57,500 for Varun. Next information. Drawings. So drawings during the year is 30,000 and 20,000. Interest on drawings 1,800, 1,200. Why it is on the debit side? Drawings is the amount being withdrawn. Okay, and drawings is recorded on debit side because we assume that the drawings are made from profits and not from capital. I'll repeat it. It is assumed that drawings are made from profit and not from capital. So therefore we are recording it in partners current account. To interest on drawings is 1,800 and 1,200. Salary being 20,000 only for Arun. There is nothing for Varun. For the commission for both the partners 10,000 and 7,000. The last item is share in loss, that is from profit and loss appropriation account. They have got a loss 60,000 and 40,000. Now let's do the balancing. Let's focus only for Arun. Arun debit, Arun credits. If you look at the credit side is more than the debit side. The credit side balances is more than the debit side. So let's do the balancing. So if you take the total of credit 86,250 plus 20,000 plus 10,000, you will get 1,16,250 written on both the side. 1,16,250 minus 30,000 minus 1,800 minus 60,000. We are going to get an amount of 24,450, which is being carried down and brought down. Next, debit side amount and the credit side amount. Again, here credit side amount is more than the debit side. So 57,500 plus 7,000, we will get a balance of 64,500. First write it on both the sides. 64,500 minus, you will do 20,000, 1,200 and 40,000. You're going to get a balance of 3,300 that is being carried down and brought down. So with this we complete the first method, that is when the partners' capital are fixed, by preparing one partners' capital account to partners' current account. I have put for you the calculation of interest on capital, that is for Arun and Varun. You can observe here on 15 lakhs 5% interest is 75,000. On 5% interest on 3 lakh for 9 months is going to be 11,250. So the total is 86,250. Likewise for Varun, capital on capital 5% is 50,000. On additional capital, that is 2 lakh, for 9 months is going to be 7,500, that is 57,500. So this holds good for both under that is fixed capital method and fluctuating capital method, because the problem is the same, only the scenario is different. The second one, the capitals are fluctuating. So in the pro forma we learned that we have only one account, that is partners capital account, and all transactions including, that is your capital, okay, plus any additional capital, okay, and if there is any partners, okay, interest on capital, interest on drawings, if there is any salary, okay, and if there is any commission, all these things will be recorded in partners capital account. So let's work out the solution. If capitals are fluctuating and we are preparing only partners capital account. First, we bring in the partners balances, the opening balances of the partners capital 15 lakh and 10 lakh, additional capital 3 lakh and 2 lakh. From the extra information provided, we have interest on capital. In my previous slide, I just showed you how exactly to calculate interest on capital for Arun and Varun. Okay, so we take up the same amounts, 86,250 and 57,500. Next information is drawings. Drawings are reducing the partners' funds, that is 30,000 and 20,000. Interest on drawings 1,800, 1,200. Salary, that is only for Arun, that is 20,000. Commission for both the partners 10,000 and 7,000. Share and loss being 60,000 and 40,000. So now let's do the balancing of the partners. Beginning from Arun, the credit side amounts are more than the debit side. So first let's do the balancing. We will get 19,16,250, okay, minus 30,000, 1,800, 60,000. We will get an amount of 18,24,450. Proceeding further for Varun, the debit balances, the debit amounts with that of the credit amounts. The credit side is more than the debit side. So we will write the credit total on both the side, that is 12,64,500 minus 20,000 minus 1,200 minus 40,000. We will get a balance of 12,03,300. The same balance is being brought down for the year ending.